Hey guys, Jeff here with Simply Derivative, and here is the Trade of the Day report where we cover and highlight and review a trade that we took during the day's session, whether it's in the futures market, options, or stocks. I wanted to give you guys a short video on kind of the thought process and the ideas behind the trade that we take and what it looks like on a chart, our reasoning, so you can take all that information and apply it to your own trading. If you guys need help analyzing the markets, understanding technical analysis, and really trying to get an idea of what the market is telling you to do next, then you definitely come to the right place. So let's get right into it with a futures trade that we took in the micro E-minis on the S&P 500. Taking a look right here on this 15-minute, we have a 15-minute and a 30-minute that both show the signal for an opportunity for us. In this case, it was a short opportunity where we grabbed 4 and 10 points on a couple contracts. And let's go right into the thought process, okay? So this is all pre-market right in here. This is all pre-market. Pre-market high is up here. Purple dotted line is the pre-market high. The previous day high was this wick in this box right in here. So pre-market, overnight market, Globex, came up, tested the day session high, failed from that level, and pulled back. And you can see it came down and set the overnight low. Prior to the market opening for the regular trading hours in the US, the market started to bounce a little bit, opened up here, and we got a strong push through all of this, back up above the open and the previous close. These are two price levels we pay attention to on a daily basis. Price rallied through that level, got up to the overnight high area, which was also the previous day high area. You can see here it is on the 30-minute, the overnight test. There's the previous day high, all within the wicks. When you have price creating wicks, you may need to go down to a smaller time frame. That's what we do. We have a 15-minute. So you can kind of see that prices were at the extreme up here for the time being. And so the market, regular trading hours, pushes up through the previous close in the open, like I said, tests this overnight high area, which was a previous day high area, fails, and then proceeds to move back lower. We got a nice strong close on the 15-minute below this previous close and open area, telling me that the market potentially wants to go retest or test the overnight low. A lot of the times when the market comes up and tests the overnight high, and the same can apply to the overnight low as well, but when the market comes up and tests the overnight high and fails to break the high, and you see it start to move lower, there's a good chance, a high probability, that we'll go test the overnight low. And to this point, we were having an inside day. When you have an inside day, meaning that today's trading range is within the previous day's trading range. And so that type of trading tells you that there's high probabilities at the highs and the lows to buy and sell. And that's kind of what we were looking for. Up in here, we saw that the market, we missed this trade. This was actually a setup as well, but we did not take that, the retest of the overnight high and the previous day high. And instead, we were able to catch the market down here where it was close to VWAP. We executed our trade above VWAP, which happened to be above the first 15 minutes worth of regular trading hours trading. That's the blue lines, define that. So price had come back down to this area, close to the open, started to get range bound, started to develop a little consolidation. We saw a nice further red candle close, and that gave us the entry opportunity within these wicks above VWAP, above the first 15 minutes. Seeing that we closed below the previous close and the open, telling us that the market wants to move lower and go test the low, and that's exactly what happened. Failed to take the high, so we're going to go test the low. That was the thought process. Now, typically, you don't want to trade in the middle of the range, and that's kind of what this is. The high, here's the low, here's the middle, and that's where this was occurring. But since price fell from this level in a strong fashion, since this was a previous day high and an overnight high, both producing this move, once price got back up there in the regular trading hours, and we got a close below the previous close in the open, off of this level, holding the overnight high, that gave us the conviction that we're going to go test the lows. And we're not, we're not going for 100 points. We're not going for 50 points here. Our typical trades are, 5 to 10 points on our first couple targets. If you can average 5 to 10 points on your first couple targets in your futures trading, you can make a nice living. So that's exactly what we were looking for. Entry was at 1250, 31.1250, right above VWAP. VWAP at the time was at 31.12. Our entry was at 31.1250. Stop was above these wicks, above this zone in here. So it was right around 31.16 was the stop, risking about 3.5 points to make ultimately 10. So it's, a 3-to-1 risk to reward type of opportunity. And that's what we're looking for in our intraday trading. It's a counter trend trade as well. We're going against the major trend. As you can see, as of late in the markets have gone up. So we're in an uptrend. So anytime you go against that trend, it's a counter trend trade, even if it's on a small time frame. So bigger picture, bullish, short term, take advantage of these type of little opportunities. So that's what we were looking for, and that's exactly how the plan played out. Went short in here, took our target here, took our second target right above 3100, and you can see it worked out. Now the market actually ended up holding this 3100, retesting the area where we went short, and then actually dumping lower below 3095. But that's fine. It doesn't matter what the market does after our opportunity, after we're done with the trade. We made 14, 15 points on this particular trade, and like I said, if you can average 15 points in the futures market on a daily basis, you're going to do all right. So that was the thought process for this particular trade. A little short setup on the micro ES. Again, the thought process was we saw the market open up regular trading hours, rally up to an overnight high, rally up to a previous day high, fail at that level, failed to take the high, came back down. Once we saw it fail at the overnight high, strong indication that we're going to go test the overnight low. We waited for an opportunity to get on board after missing the high of the day, the regular trading hours high of the day. We saw another opportunity to take the market short, take this product short, and that's exactly what we did. So hopefully this was helpful for you guys. Just a little insight into how we trade using price action and technical analysis. This not only applies to our futures trading, but it also applies to options and stocks. And so if you guys are interested in learning how to understand the market a little bit better, understand price action, and how to use it in your trading on a daily basis, check out this video, check out the other videos we have. Be sure to subscribe to our YouTube channel, follow us on all social media, Simply Derivative, or you can visit the site at simplyderivative.com. Like I said, hopefully this was helpful. This was the Trade of the Day report, and we'll see you next time.